Hello everyone, my name is Michael Pierre and welcome to Mindful Investing. Today I have a 101 on TA trading. So this is the notes that I personally made when I was learning to trade. To start off, there are two ways you can invest, technical or fundamental. And fundamental is going by income statement, cash flow report, whereas technical, you're using the charts of the price movement, and you're buying and selling either the same day or buying one day, selling, say, the next day at market open. A very important thing to know or to be familiar with is support and resistance zones. Charts will have this, say, ascending line of support here, and you can actually draw a line and predict the next time it'll hit a bottom to a certain degree. Now, you don't want to, say, buy in because you think it's going to hit this exact line. Just notice the kind of patterns that these charts make, because it does follow this more often than not. And that's all we're looking for, is just a certain margin that increases our likelihood. The lower the line that it follows to the downside, or that creates the lower highs, say, or higher lows, whichever one, is the line of support, and the line to the top side is called the line of resistance that keeps rejecting it. Two very important things to know are volume and float of a stock. That's basically another way of saying supply and demand. So how many people want this or don't want it, who are selling it, and how many of those are out there. So very important vocabulary to know, and a couple that might not even be on here. I feel like I noticed that after. So for example, Bearish Flag, Bullish Flag, Flattop Breakout. A lot of these are self-explanatory, but even for example, Flattop Breakout would be this flat top here and breakout to a new high. Definitely pause this video, look all these up on Investopedia, write them down. Yeah, that'll be very good information to know. Scanning allows you to narrow your search. Say if you don't have a stock you want to trade yet, and you're looking for a stock that's following a certain metric, search for all the stocks that are performing a certain way and help narrow which one you want to trade. Alright, so one of the most common patterns you'll find is bullish flag. Bullish flags are found in stocks with strong uptrends. So the pole is the result of the vertical rise, and the flag results from a period of consolidation. So for example, this right here would be the flag pole, and this lower highs and higher lows is the consolidation period that creates the flag. This is a very common pattern that indicates a movement to the upside in the near future. And these actually most of the time don't end up fully completing like this beautifully. So they might only do 50 to 70% of that actual pattern. That's why it's good to have this written down and know when to recognize it as early as possible. Inversely, a bear flag. And I forgot to say, this is another way that a bear flag can also result. So it can be a pennant-shaped flag, or it can be a rectangular-shaped flag, or a wedge-shaped flag. And I know it's kind of not ironic, but opposite of what you would think, that lower lows here would be a bullish thing. It actually is more likely than not. It is leading to a movement to the upside. And again, none of these are 100% guarantees. That's why you need to mitigate your risk, and the more trades you make will create an average. And as long as you're winning more trades than you're losing, or at least even if just as long as you're losing very, very little. And again, the flat top breakout is what I drew before here. So similar to bull and bear flags, except it's just that sideways consolidation. The same trend followed by a horizontal continuation with low volume. That is also key. So if you have the volume on your chart, which I don't honestly trade with the volume on anymore, because if you have sideways consolidation, chances are there will not be much volume, especially if there's low volatility. So that means there's no one trying to play this thing with a breakout, mindset. So you'll have very, very, very low, and then probably some, I can't find my red pen right now, but probably some red candles here as well. And then suddenly some really big candles up here. But again, you know, you can kind of tell that based on the price movement as well. A 1, 2, 3, 4, 4x reversal pattern. It is a buildup of 4 definable points. So, I mean, I guess this is really another way of saying a micro-minute pullback, honestly. And you can play that to the upside or the downside. So here you'll see TP a lot, or if you're just reading articles, or you know, or even just using certain platforms, trading UIs, they'll use the term TP, which is take profit. And that is a limit order used to close a position when the market reaches a certain price level. Right here, I have take profit based on SL, which is stop loss. So this is a fixed movement. Say if you have a fixed amount of money you're always willing to lose. That would depend on the value of risk taken on each trade. So if you're doing a risk to reward ratio of 1 to 2, that means you have to be winning more than 50% of your trades. So like basically if you have a chart right here, color, it really doesn't matter. So TP based on SL is really talking about risk to reward ratio. So this is take profit based on stop loss. And this is referring to, say it has say there is a consolidation period right here. It goes to a new high and then comes down to another period right here. And say it's making, honestly, right here, you would probably be, kind of pattern like that. That would be a bear flag. And say I wanted to sell right there. I would have to measure the amount it would be going down. Like, what is this price range versus this price range? And what is the risk to reward ratio on that play? So as long as that is within a certain metric or a certain number for each trade you make, and you don't stray from that method, that is how you make consistent gains. So I think I'm gonna stop it right there and continue the rest in part 2 of this video, so I don't make it too long. Thanks for watching, and I'll see you in the next one.